Welcome to Just Make Money. Just Make Money is a platform where you get a very professional outlook about any market right from the trading desk. If you are a professional, if you are not a professional, if you have a view about the market, even if you do not have any view about the market, you can have our view, or you can rely on our view, or you can cross check through our view with regard to any market in the world. Today, we'll be talking about currency market, dollar index, dollar versus Indian rupee, pound versus Indian rupee, euro versus Indian rupee. I had been suggested to you that you should be continuous in following our videos because this will give you a long-term perspective about the currencies and you will get a very fair view about how to go about your investment needs, trading needs, or your hedging needs. What strategy you should follow. Because if you have a long-term perspective, you can always cut them into short-term, or you can always move in the right direction in the longer term. So let's talk about dollar and various other international currencies versus Indian rupee. I, Sumeet Kumar, with more than 25 years of experience in international and domestic financial markets, I'm bringing to you my thorough analysis about the currency market, my total analysis about the currency market in India, and how to go about it. All you have to do is just to sit and listen. It will be short and it will be very precise. Let's begin with dollar index. This graph, this price pattern, I had shown to you earlier on. This I'm bringing to you again so that you should come to know that how the things have moved. As you can see, I was telling to you that it had to touch around 114, 115, the dollar index I'm talking about. And from there on, it had a support of around 108 and 109, which it had breached. The support of 110, it had breached, and now it is around 105. This is a slightly older chart, but it will give you also a very clear perspective that how it had broken 109 and why it is now sitting very comfortably without moving much either side around 105. This is what it's doing, somewhere between 105 and 106, the dollar index. Now the worst it can go down to is around 100 and 101 range. If it does so, it will have impact on other currencies. Other currencies will get strength according to the weakness of dollar. But let's not talk about this. Let's see the range where it's going to go in short term. Because right now, the upside for dollar index is capped. We are not expecting dollar index to go beyond 109.50 or say in broader term 110. And we are not expecting it to go below 100 levels down. So it is in a very broad range of roughly 10% move, dollar index. Once again, I'm telling you, dollar is resting, dollar is trying to consolidate, dollar is not down. So this is a broader concept, this is a broader thought that we should have in our mind before taking any decision. Now let's look at Indian rupee and how it's going to go about versus dollar. This is the price chart which I had shown to you earlier on. This is a previous price chart which I had already verified. It was around 82, 82.15. Then where it's going to go, I told to you that it will be touching 83. It had touched 83, then again it came down. Now we had also talked to you that after touching 83, it will be coming back to say 100, 81 and something in the range of 81.5, but it has gone below 81. It had touched around say 80.5 with some fundamental news which led to the weakness of dollar in the international market and the strengthening of all other currencies including rupee. So this is what had happened, that it had touched around, our currency has touched around 180.5, and then it had pulled back. It had pulled back above 81, moved close to 82. Now it is back to 81.5. Now what looks like for Indian rupee? Indian rupee is also in the phase of consolidation. It's neither going down nor going up. Neither it's weakening nor strengthening. Assume that will be somewhere in the range of 81 and 82 in short term. Short term simply means week, 10 days time. I'm not talking of a month right now. We should not buy Indian currency right now. This is, I mean, it looks very reasonable that if dollar is strengthening, dollar is weakening, sorry, then we should be buying all other currencies, including Indian rupee. We should not. It's not showing that kind of strength as of now. There have been tendencies to get a strong for Indian rupee, but it has not done so. It has always pulled up again. Pulled up means it has always weakened close to 81.50. So there is a broader range for the currency somewhere between 81 and 82 in short term. Now, for any importer, I will suggest that you should be buying it. To hedge your exposure, you should buy it. You should not wait now, because it's going to consolidate, so it's quite safe to buy right now. And for exporter, they should use options. They should use options to hedge their exposures. For traders, you may not gain much, but it will always be advisable that you play for the both sides. If it goes to 82, you should sell. If it comes back to 81 levels, you should buy. So there is a broader range to play for traders. Now this is for euro versus rupee. This is a previous chart, an old chart I had shown to you, price chart, which showed that it is within a channel. And I told to you that if this channel is broken, 81.50, 82.5, if it is broken, then it could be very strong, which you can see that it had quite respected this level, but after that it had broken out. This is when the dollar index had gone under 110, and this is when Euro INR had moved up close to 85 and 86. Now what should be done? What it looks like? It looks like that it is not going to gain strength any further. 85, 86 should be the cap for it. So exporters should be hedging it by selling the futures or the forward. Don't go for options in euro. And as far as importers are concerned, they can wait, because it's not going to, euro is not going to gain strength any further as of now, not much, so they can wait. Traders, they should always sell around 85 to 86. Don't buy euro right now. Now this is for pound sterling. Pound sterling had actually crashed sometimes back. This is the previous chart of pound sterling. You will see that it had gone out of the range. Again it came back and has been touching the upper side of the range. It had tried to move up, it could not. But after the change of the government in England, UK, it moved up. It moved up close to 98, but now it is close to 100 levels. My suggestion for pound sterling is the same. It's going to follow the strength or weakness of dollar like euro, and it is not going to move further as of now beyond 100 in a short term. So exporters, they should be hedging their positions using forwards or futures. Traders, they should be selling it on every rise close to 100. That is the best strategy for a trader. And as far as importers are concerned, they can wait. Or if they want to hedge, they can hedge partially. Pound sterling has a tendency to fluctuate more than or go beyond someone imaginations or predictions, though they should be doing it partially. You should also expect all these currencies, say euro or pound sterling, to come back to the levels from which they had broken out, not in the short term, but in medium to long term. That is, that pound sterling can come back to say the levels of 93, 94. And euro can come back to the levels of say 81 and 82. Not immediately, but after some time. So till then, just follow the strategy which I have suggested and keep your mind open for trading or hedging or investing. And also keep tuned to our videos. They are very precise, they are very short. We don't use much of datas for you. We use them for our analysis, but we don't provide it to you so that you don't have to get into all those datas and informations and so-called tips. You just have to listen to the very gist of the information that we provide to you, the data, the analysis that we provide to you. This is the squeeze of the entire data, fundamentals, and technicals that we provide to you. Our analysis is a mix of fundamental analysis and technical analysis. It's not only fundamentals, it's not only technicals, it's both. It's a mix of both. I hope you must have liked our video and you must have gained something out of our video. And if it has been to your liking, then I will suggest and request that please share it with people, share it with all the people who are likely to be impacted by the currency moves. And if you want something more in our videos, then please comment. If you like it, then please press the like button, subscribe it so that it comes to you directly, and be in touch with us. We'll be back again. Thank you.